President Trump's Liberation Day tariffs just left the market free to go into freefall, and we're seeing a complete sell-off in equities on stock exchanges all over the world in response. But also, there are actually one or two stocks that are holding up okay. About 60 countries now being subject to reciprocal tariffs, although it's a little bit unclear as to whether those reciprocal levers were really calculated properly. And some of these levels are really high. For example, now 49% tariffs on imports from Cambodia, 46% on imports from Vietnam. These are big sources of textiles, and so that's why you're seeing companies like Nike and Lululemon getting absolutely hammered in response. More tariffs on China taking the rate to 54%, which is why for appliances, for example, like Whirlpool, also share prices down dramatically. Same for the retailers dependent on importing from these nations. Last time a Trump administration put in place mass tariffs, a lot of companies tried to deal with it by moving their supply chains away from those countries being hit by more tariffs to try and import more from those with lower or no tariffs. This time, President Trump's put in place a 10% baseline tariff, which means it's going to be really hard for importers to circumvent paying any kind of tariff at all. And when these tariffs were announced in the Rose Garden, there wasn't really any discussion about how they could be negotiated away. Despite that, the market is expecting that this is just the first in a series of steps. And we're now waiting for Europe, Japan, and other nations and regions to come out with perhaps retaliatory tariffs to understand where any negotiations may end up. Now, there are one or two areas in the market showing some resilience despite this mass sell-off. For example, AT&T, at least right now, looks somewhat stable. And it's those kind of companies, utilities, telecoms, less exposed to tariffs that might just be able to ride out this wave. We're going to keep watching and keep you updated with more.